taking a look at the market, and history repeats itself in the market. You can say, Patrick, how can you say that? Well, after looking at a lot of charts through the years, I know this. But also, when we take into consideration, the charts are a reflection of human emotions: fear, greed, panic, complacency. And folks, we're humans. That's the way we're wired. All right? And it's not going to change. Just how it is. And that's fine. It's good. It's actually good. It helps the human race, continue. But anyway, we're taking a look right here at the spiders. This is from last year. And I'd just like to show you this. The importance of looking at price and volume. It goes up, low volume here, falls on a pickup in volume, falls on a pickup in volume, goes up a bit, falls a bit on low volume, goes up a bit, but these bars are less than these two, and then it falls again on a pickup in volume. All right? And then it kind of goes up. But if you noticed, no bars, none of these green bars are anywhere near this bar or this bar or this bar. And then it rallies up and it starts to fall a little bit here, but not bad. All right? Advance it. Just advance it a day. And it starts to fall on pretty heavy volume. And what does it do, team? It comes right down to the rising 21 EMA. Okay, but the trend is still up. There was some distribution here, a little bit there. Well, we've got to be cautious. You don't forecast tops. We let price and volume talk to us. It's that simple. So then we do this. And look at that. That's a big warning sign. Huge. As I've stated before, people talk with their mouths and vote with their pocketbooks. It fell here on pretty heavy volume, team, didn't it? It fell here on pretty heavy volume. And look at all these other bars. There's no green bar that comes close to this. There is no green bar here that comes close to these 2 days. So then, heavy volume, and then it does this. Boom. Marking all these things together, when it started doing this, we were getting out. We're getting out. I'm not going to get out at the top. Nobody gets out of the top. Do you know why? Well, liars get out at the top. I don't get out at the top. Why? Because you don't know it's the top until after it's passed. But you have price and volume characteristics and traits in here and clues that tell you there's not a lot of power. So then it does this. And you're like, boy, I'm glad I'm out. And then it does this. And then it does this. And this entire decline, and I can document this, and I think some of the veteran VIPs will too. Document this. We were out. We just stayed out. Left it alone. There's one example. Flops around, then it does this. I mean, folks, this is the stuff that can scar you. All right? Wiggling like this can do the math. That's almost 100 points on the spiders. That'll mess with you. And that is right there, 100 points on the spiders. In 4 weeks? You don't want that to happen. And flops around, does this even more. All right? Bounces. Does a higher low. I marked this and I'm telling the VIPs, hey, this could be a higher low, and it starts to lift. And there you go. You got your bottoms. Did the same thing with QLD. Now, let's take it a step further here, all right, if we can, and let's go in and take a look at, okay, now what we'll do here is and you can see this trend here, I defined it. Now what we're going to do is we're going to advance forward here a little bit. Joys of modern technologies. Marching up nice, great trend, we participated in it. Look at this bar right here. See the volume? I'll go back. It's going up, but is there real power here? No. But do you argue with it? No. You just ride the trend, okay? But you got a little bit of distribution on this bar, a little bit of distribution on this bar, a little bit of distribution, but the trend is still up. The trend is what counts. But you're always on the lookout for quote-unquote warning signs. Oh, then it drops. You go, oh boy. Now, is this a trigger to sell everything? No. Good Lord, no. But there was serious selling. Things that you had that you bought recently, you better get lighter on. If you have stocks that you have gains in, that's a warning to maybe take some off. Do you sell all of it? No, the trend is still up. Then it starts to come down here on heavier volume again. Okay, 2 heavy volume bars. Down. And what's it approaching, team? It's approaching the 50-day. Down on heavy volume, inside bar on much less volume than these 3 down volume bars, right? And it starts to drop on about the same volume. Support at the 50-day, okay, on less volume. Bounces off the 50-day on decreasing volume. Up on decreasing volume. Look at this, 3 days in a row of decreasing volume. Reverses down, gaps up, and look closely. I'll make this bigger for you. Gaps up, see the open? Runs up and reverses down on a pickup in volume. Okay, drops a bit on a pickup in volume. Oh, it loses the 50-day. Oh, gee whiz, fell lower. Oh, starts to bounce. Oh, down. Chops around a little bit. Okay, when it started to do this, what do? We missed it. We got out. Then it turns and it starts to go back up. So now what are we going to do? And now we'll proceed forward to recent times. We'll just go through this. And now, I know that this is still fresh in your mind, okay, because you just went through this, but it's good to go through bar by bar. And I actually had made a video on this before. But as you can see right here, you get reversal, all right? But it's small on low volume. Advance it. Just a quiet bar bouncing off the rising 88. The trend is up, okay? The trend is up. Closes down just a little bit on a slight pickup in volume, but close near the highs of the day. Everything's okay. Gaps up and reverses down. Make it bigger. Note this. Here's the close. Gaps up and reverses down. Okay. The trend is still up, but when you monitor it with the action of the stocks, you just get a little cautious. Oh, look at this. It gaps down and closes right near the 21 EMA, which is the blue line. Oh, look at this. It gaps down, falls, and reverses back up. All right. Good. Good. Goes up on less volume and then drops on heavy volume. Look at this right there. That's heavy selling volume. And you all know this because I did a video on this too. All right. This is recent. Falls down, as you can see, on heavy volume. Pulls up here. All right. But on less volume than those 2 selling volume bars. It's just chopping around. Quiet inside bar on less volume. Falls again on a pickup in volume. You see that right there? On a pickup in volume. And then it drops on heavy volume. Our tactics, monitoring this, and the action of the price and volume of the stocks helped us avoid some problems here. You have an inside bar right there. Okay? Inside bar. And that is where we're at today. And what do you notice? Look at the volume on this bar, selling volume on this bar. Look at the selling volume on this bar. Look at the selling volume on this bar. Look at the selling volume on this bar. Okay? And now here's today, Friday, March 5th, 3/5/21. It's up, and it's an inside bar. Is this a bar to get really aggressive on? No. And by monitoring price and volume, it helped us avoid what was going on here. And you can say, well, yeah, but it came back today. When this is happening, I don't know what tomorrow is. Nobody does. All we do is we act according to what is happening. When we don't forecast, when we don't use our ego to say this is what's going to happen next, we see the present more clearly, and it helps us formulate tactics and strategies to get in line with what's happening, whether it means going flat or getting lighter or going long or getting heavy long. And that's what we do.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.